Welcome to
Welcome
the
to
Rule
the Rule
Classroom Plus.
Classroom.
This is Steve Barton, and thank you for tuning in. Today, we're going to be taking your questions and asking Rick himself. So, we're going to be pulling the questions from the Rule Classroom Plus members. So, head over there using the links down below or go to the ruleclassroom.com. You can also try out the Rule Classroom for free. That's my favorite price. Or for more serious investors, join us in the Rule Classroom Plus. So wherever you're watching, whether it's YouTube, Twitter, or any other outlet, that's where we'll be pulling the question. Rick, how are you, sir?
Very well, thank you. Like yourself, I suspect, resting after a very hard week last week at the conference. Thank you, by the way, for your participation, both before the conference and during the conference. Folks like you that make that conference the success it was. Over 600 people live, at last count over 1,400 on live stream. So it certainly was well attended.
Awesome. Yeah, you're welcome. I'm honored to do it. It was a lot of fun. It was great. So thank you for putting it on.
A pleasure. For those of you who weren't able to attend live or live stream, remember that the recordings are for sale. You didn't need to miss anything. And after reviewing the tapes, you don't think I've given you your money worth? I'll give you your money back. An absolutely riskless financial transaction for you. I'm highly confident, however, that you will find the recordings very, very, very worthwhile. So let's get into a little bit of the news today. There's too much to comment on all of it, but let's take some of the high points. The most obvious drama is the interplay between the executive branch of our country and the Fed. The idea that Mr. Trump wants dramatically lower interest rates, and the Fed, which believes that as an institution, they're the only thing that stands between the demise of the purchasing power of the US dollar and the current political quagmire in Washington. I suspect that the intermediate term aftermath of any political removal of Mr. Powell would be extremely beneficial for gold. I wouldn't necessarily look for something to happen the next week because it's been one of the most widely telegraphed fights in human history, which is to say a lot of people are already in the gold market as a consequence of their belief that there's a probability that either Mr. Powell lowers interest rates or he will be thanked and excused. Make no mistake, however, the impact of lower interest rates will be seen by the financial community around the world, myself included, as capitulation in the fight to maintain the purchasing power of the US dollar. We've talked in this discussion group for a long time about the challenges facing the dollar. The $37 trillion in on-balance sheet liabilities, or 30 trillion net of the Fed's own balance sheet. The $100 trillion in off-balance sheet liabilities. The concept of the fact that, according to the IRS, the aggregate net worth of Americans is $141 trillion individually, and we owe $130 trillion at the federal level. In the Commons, the idea that the on-balance sheet deficit grows by $2 trillion a year, and the net present value of unfunded liabilities grows by about $2.5 trillion a year, which means that the surplus between what we're worth and what we owe disappears in 3 years. As if the challenges didn't have, the dollar didn't have enough challenges. The idea that you would lower the return you get for taking this credit size risk is something that concerns a lot of people, myself included. Those of you who don't own gold should own gold. Don't own it to make money. Own it to shelter yourself from the deterioration of the purchasing power of the US dollar. The drama around the Fed will come and go, but make no mistake, any dramatic lowering of the interest rate will be seen by financial markets worldwide as American capitulation with regards to the dollar, and that should, if passed as prologue, benefit gold. Let's move on to the gold stocks. One of the things I came away from our own conference last year thinking is that for many people, participation in the gold equities markets simply should mean owning the best of the best, owning Wheaton, who was an exhibitor, owning Agnico, who was an exhibitor, owning Franco, who I will do my very best to make an exhibitor next year. They've exhibited in the past. Because the truth is that a gold equities bull market, which we are well and truly in, generates so much beta being defined as the outperformance of the sector relative to the broad market, that owning the best of the best is a good strategy, just capturing the beta. The truth is, owning the best of the best in a bull market, you probably underperform the gold market as a whole, but you do it by eliminating all of the operating risk involved in lower companies. I had breakfast at the conference with the CEO of Agnico Eagle, charming guy, by the way, who talked about the growth profile of Agnico Eagle. The idea that you can more than replace production, producing that much, and do it from existing brownfields projects is extremely exciting. They're a good construction company, and there's a lot of growth built in that. Note, however, that there are some people for whom beta isn't enough. They seek alpha. I happen to be one of those. I have a lot of beta investments, but the truth is I like to try to outperform the market, or at least I like to try to take risks to make big sums of money. There is just now beginning to see people coming down into the junior market as a consequence of them having made some money in the senior market. You remember earlier discussions likening a precious metals market to a circus master's whip. The gold itself is the handle. It moves first, but it doesn't move the furthest. The best of the best move, and we've seen that in the last 18 months. Then the best of the rest move, and it goes on down the quality trail. You can play at any point in time in the trail. You can do as I do, searching for relative value all the way down the chain. You have company now. 6 months ago, you had no company whatsoever. We're seeing high quality junior companies go to the market to finance and come back oversubscribed. The idea that the industry is undercapitalized is no longer true. Remember earlier discussions that we had that suggest that if you looked at the junior market as a whole, probably 85% of the companies that populate, or one could say pollute that space, are terminally overvalued, which is to say they're worth nothing. That disguises the fact that 10 or 15% of the companies generate such startling results that they add legitimacy and sometimes luster to a sector where 85% of the companies are valueless. Remember to use the lessons at Introduction to Natural Resource Investing here at the Rural Classroom to learn how to discriminate among your gold stock portfolios, segregating them in movie parlance into the good, the bad, and the ugly. Steve, that's all the editorial I need to spend time on today.
Okay, so T versus P, Trump versus Powell, should be very beneficial for gold because interest rates are likely coming down, whether Powell does it or whether he's thanked and excused, and the next guy does it. As interest rates gets lower, people run towards something that should benefit from that, and gold should be it. Things you learn from the conference: for most people, just owning the best of the best, Agnico Eagle, Wheaton Precious Metals, and Franco-Nevada, and they'll do fine. If you want to play a little more alpha in the sector, that's where the symposium just shows its hand in spades. Is we're kind of entering that stage now where the best of the best have shown their performance. Now we're looking a little bit more down towards the mids and the juniors, and basically avoid the 85% that are probably not worth anything. And that's where the symposium comes in, is you picked out 60 something companies that you think should do well.
That's right. Your first comment that gold should do well, I need to say that to the extent that Mr. Powell, as an example, was accused tomorrow, there might not be a move in gold because people have anticipated it for 2 or 3 weeks. The gold trade is a crowded trade. Longer term, however, capitulation in the form of an interest rate reduction, I think would be very beneficial for gold. I remember very well in 1975, a very long time ago, when the U.S. political establishment capitulated and forced interest rates lower. And that set off an absolutely wild romp in gold. In the 5 years after that announcement, the gold price went from a low of about $100 to a high of $850. That's what capitulation of the world's reserve currency looks like.
Okay. All right. That could be a heck of a move. I think our base is probably starting at around 1,600 or so, and so far we're a double. If history repeats itself, that could be impressive. Okay, we are going to get on to some questions here. And so remember, we're pulling the questions from the Rural Classroom Plus members. So follow the links down below. Head on over there. or go to ruralclassroom.com. Victor wants to know, let's see, what are your thoughts on Hecla Mining? So the silver company Hecla Mining.
Understand that all of these company-specific comments are snapshots in time. This conversation is taking place on the 17th of July, 2025. News could change in half an hour, which changed my opinion. So don't be looking at this as timeless advice, whatever you do. Let me start by saying I don't own Hecla, but it's a wonderful proxy for silver. They are not a particularly efficient silver miner, but they've been around for 100 years. They have probably 100,000 shareholders who are silver bugs, and there's nobody as predisposed to good news as an existing shareholder. Also, because they're not a particularly efficient producer, higher silver prices widen their margins more than they do, ironically, more efficient producers. If you're a silver bug looking for leverage to silver, as opposed to a mining investor looking for efficiency in recycle ratio and production efficiency, Hecla is a really good stock for you, Hecla and Coeur. I don't own them because I'm looking for different things out of my stocks.
Okay. Right. And Raj wants to know, what do you think of Aclara?
I'm a reasonably good size shareholder of Aclara. I don't like it as much as I like Meteoric, but it's in second place. And it's in second place in a commodity sector, rare earths, where high quality speculations are extremely rare. So, although I don't own as much of it as I own Meteoric, I do own it. I do like it. Note with regards to Meteoric, it's almost inevitable that they do a financing in fairly short term. If you don't own it, you might want to wait for the financing and any weakness that might accompany a share price issuance around a financing.
Okay, so you're saying basically they're going to have to raise money, so they'll issue more shares, so each of those shares will be worth a little less. So if you can hold off on that, then that would be probably beneficial. Okay, Meteoric's down in Brazil. Where is Aclara? I don't follow that one. What's that?
Also in Brazil.
Okay. Okay.
The company is domiciled in Peru, but the deposit's in Brazil.
Okay. Ashley wants to know oh, I'm sorry. What are your rankings on Aclara?
I have Aclara to 5.
Okay. And Ashley wants to know, what are your thoughts on Minera Alamos?
I'm tempted to have Minera Alamos at a 4 because I see the stock going higher. I don't own it because I don't like smaller deposits, and this is a smaller deposit. Highly economic, and a very high quality management team. So I don't discourage it. It isn't one that's in my portfolio because I tend to err towards larger deposits. This is a high probability build, and my suspicion is it's a fairly simple deposit to both build and operate. A good management team. Once again, I don't own it. I have it as a 5. If it were any bigger, I'd upgrade it to a 4.
Okay. Limited by size. And let's see, what do we got up here? Rico wants to know, what's your favorite company out of Argentina?
I'm not sure I have a favorite. I own a reasonable smattering of Argentine companies. The one that most immediately probably comes to mind, because I spent a lot of time with them at the conference, is Abra Silver. But Argentina is very, very, very fertile exploration terrain. And maybe I should amend that. If I looked at my portfolio and told you the one that I have the biggest position in, it would easily be NGEX. Admittedly, that position was acquired a long time ago at a much, much, much lower price. Argentina is a place that's had tremendous exploration potential for a very long time. It's been held back by very, very, very poor governance for as long as I've known about the place. I like visiting there. I've invested in Argentina when I've been allowed for 30 years, and it's always been a challenge. The guy who runs Argentina now, let's just say it wouldn't hurt my feelings if he was running the United States. A high quality guy, and I suspect that you will see over the next 12 months fiscal stability agreements entered into that will allow really wholesale developments, both on the mining side and the oil and gas side. It's worth noting that their shale formation, the so-called muerte, pardon me, or dead cow formation, may be the best unconventional shale deposit in the world. Almost undeveloped, certainly relative to more conventional um, environments like the United States and Canada. And all of the copper developments that have taken place in the South American Cordillera, or virtually all, have occurred on the Chilean side of the line, not because the geology didn't extend across the line, but rather because Argentina was such a harsh political terrain. That's all beginning to change. It occurs to me that there have been suggestions from some members of the rural classroom that we do some industrial tourism, that a group of us go to visit a country and visit some mine sites that would both be pleasant and potentially profitable. And on the short list, I'm not saying I'm going to do this. I'm 72 years of age. What I might do is hang out on my porch and have a beer. But to the extent that I don't do that, and I want to lead, I don't know, 20 or 30 like-minded people, the places that come immediately to mind are northwestern BC, the so-called Golden Triangle, northern Nevada, where you can see all kinds of huge existing mines, boy stuff, great big trucks and shovels and smoke and stuff, or Argentina. So anybody who cares about any of those three options should probably put it in the discussion group at the classroom and see if you can get me off my fat behind away from drinking beer on my deck and taking some people on a tour to some exotic locales. Look at mine.
Well, we've talked about this off camera. I'm in. I vote Argentina. Well, maybe we'll start a discussion in the classroom and see what see what ends up. But that would be a lot of fun. I did notice that there was a weighting of companies in South America at the symposium. So you're definitely showing a preference there.
Yeah, remember that the companies at the symposium reflect my own bias, and certainly South America has treated me well, and I'm certainly bullish, cautiously bullish about the Argentine experiment. Chile's treated me extremely well, uh, and Brazil has treated me extremely well. And so there was, on the exploration development side, a real weighting towards Argentina, as you suggest.
Yeah. Okay. I was joking with Joaquin, the CEO of Argenta, now about that. I asked him if he wanted to trade leaders. Okay, let's see. Daniel wants to know any comments on Awale Resources?
I'm an Awale shareholder. Indicated discovery. It's too early to say it's going to be a mine. A lot of smart people are putting money into it. Good, well, not good, really good early exploration results. West Africa, so you're going to have political challenges, you're going to have social challenges, but thus far, the drilling has indicated something worth watching. I have it as a 5.
Okay. Let's see. Osgur is asking, he says, one key takeaway from the Rural Symposium was Seabridge, EMX, and F4. What are your rankings for them?
I've downgraded F4, so I have them as a 6 now. Seabridge I have as a 5, although the market has been extremely nice to them. If the stock continues to rip, I may have to downgrade it too. Understand that Seabridge is an optionality stock, and it is possible to overpay for optionality. Note too that I am and have been for 3 decades a friend of the CEO, Rudy Frank. That stock has treated me extremely well in my life. I've owned it on and off for 3 decades. And I'm sorry, the last name, EMX?
EMX.
Yeah, EMX is probably selling for half what it's worth. The catalyst is in place. Zijin isn't making any noise about their exploration in Serbia, but Landsat photos show them running between 12 and 13 rigs on a discovery that they haven't talked to the market about now. A big company like Zijin doesn't run 12 rigs on a discovery that isn't giving them joy.
Okay. All right. Tillman wants to know, hello, Rick. After the symposium, has your macro outlook changed? Do you think there is a recession coming?
I wouldn't regard the conference as a good way to find out if there's a recession coming. I'm not an economist either. I'm a credit guy. As a credit guy, I've expected a recession every minute for the last 3 years, and mercifully, I've been wrong. What I see now is weakness in a lot of commodity prices. Weakness in commodity prices despite cresting production, oil pricing, gas pricing, weakness in commodity pricing in US dollar terms when the US dollar is weak too. That tells me that we may be in a recession, not headed towards a recession. Nickel prices soft, ammonium fertilizer soft, zinc prices soft, oil prices soft, gas prices soft. That tells me that near-term demand is similarly soft, but I'm not an economist.
Okay. Han wants to know, hi, Rick. When you value producers, at what cash flow multiple to enterprise value do you see the company undervalued?
I don't use cash flow multiple simply because cash flow multiple doesn't discriminate between companies with long reserve lives and short reserve lives. I use net asset value or net present value, where I take the reserve and resources on a company's balance sheet and I schedule out the cash flows per the company's own guidance at whatever discount rate I deem appropriate, often at the company's cost of capital, which is very harsh in capital markets terms. But I'm interested in the total value of the cash flow, not this year's cash flow relative to enterprise value.
Okay. So you're looking at what is this going to produce over years, not this quarter.
My method penalizes very long reserve life projects. On a net present value, as an example, at an 8% discount, almost none of the cash flow that you enjoy after year 8 has any net present value. So what you have to do is you have to assign a terminal value, because at year 8, if you have a 35-year project and you, after year 8, restart the net present value calculations, you restart it back at 100. So you have to value the tail asset as well, which is uh, not science, it's all art.
Okay. Patrick says, hi, Rick. I would value your thoughts and ranking on core natural resources following the merger of Arch Resources and Consol Energy.
I don't have an opinion on core, so I can't answer that question.
Okay. Oh, and guys, we're pulling the questions here from the Rule Classroom Plus. So follow any links down below to bring you over to the Rule Classroom Plus, or just go to ruleclassroom.com. Daniel wants to know Rick's rankings and opinion on Sanu Gold and Aris Minerals.
If Aris is Aris, ARIS, I'm a shareholder there. They were at the conference. They are a company fronted by an old friend of mine, literally and figuratively, Neil Woodyer, who started Endeavor Mining, hugely successful guy. I have them as a 5. I'm looking to upgrade them to a 4. Haven't done so yet. My belief is in a couple years, they will be a 500,000 ounce a year producer. They're generating very generous margins there. The stock has been hurt, I think, as a consequence of the fact that they're Colombian based, and they're in a part of Colombia, Antioquia, which has traditionally been very, very, very rough. So there are political risks. I would point out that Neil has endured political risks before, building mines in places like Chad and Guinea in West Africa. So he's been there, done that. Sanu is a name I don't own. It is one that has a lot of respect in West African exploration circles, but I don't own it and I don't know it well enough to comment.
Okay. Z Salt, what's up, man? How you doing? Good to see you. He says, hello, good people from London. Cheers. Tudor Gold. What are your thoughts, Rick?
I don't own Tudor. It's a large, very large, low-grade deposit. Very good geologist working it. Ken Conklin used to be head of exploration for Pretium. Before that, I think Silver Standard. He was Bob Quartermain hand for a long time, so he's been well trained. What you need at Tudor is, in this sea of gold, you need a high-grade starter pit. You need some way to get your capital back because the upfront capital expenses to build it are going to be huge. Good gold optionality play, but really, the question becomes, will they be able to find some area where the rock preparation allowed for the precipitation out of high-quality gold? Silver Standard found it with the Brucejack fault in the deposit that became Pretium. Thus far, on the other side of the property line, um, they haven't been able to find it at Seabridge, nor has Suter been able to find it.
Okay. Nicholas is asking about Whitecap Resources. He also says, great Boca Raton conference. So thank you. Whitecap Resources, 8% dividend, low PE, and reasonable debt. Are they oil? Is that?
Yeah.
Okay.
Yeah, Whitecap's a high-quality company, and I own some Whitecap. I don't include it on my magnificent 7 of Canadian oil and gas companies. I probably should. Traditionally, it's been a company that didn't have as much geographic focus as I would prefer. They were sort of attempting to be all things to all people in the Western Canadian Sedimentary Basin, but they've developed substantially more focus and substantially less focus on the Mississippian in the southern part of the basin, and more focus on higher quality reserves in the northern part of the basin. I'm attracted to Whitecap.
Okay. All right. And Han wants to know, Rick, can you please comment on SCP Sprott Research Analyst report from Justin Chan and Brandon Gaspar? Do you think SCP target price on the report is reasonable or similar with your own model?
Company, I don't know. I mean, I know who SCP is. I don't know which research report they're referring to.
Okay. All right. Go ahead and put that down in the comments, Han, and we'll get to it. Follow up, he says, could you please comment on Gladiator and Hercules metals?
I don't know enough about Gladiator to comment. I'm a holder of Hercules. They've had some intermittent high quality epithermal hits, and then they smacked into a porphyry, obviously the heat source. Whether or not that porphyry is large enough to be economic in the permitting climate that is Idaho is a different question. I'm always leery about places where they spell shop SHOPPE, and certainly Western Idaho is one of those places, but I like the geology.
Okay. Daniel wants to know, would love to hear Rick's opinion on calculating potential mineralization size using drill results and magnets.
And what?
Magnets?
I have no idea what that
Okay.
means. I'll have to pass.
Okay. All right. Maybe simplify it down below, Daniel, or expand. Z-Salt, Denison's Sabre success. What is your opinion?
It's highly interesting. What Denison is doing is applying a technology which has been used in uranium for 4 decades, in situ leaching, where rather than mining uranium ore, you look for uranium hosted in sandstone, and you do what is in effect a water flood. You put water and something, often bicarbonate of soda, in, and strip the uranium out in place rather than mine it, and then put the pregnant solution in resin and strip the uranium out of it in a process that looks very much like a chemical plant. This has worked for a very long time in surface-hosted deposits. Most of Kazatomprom's production, as an example, is ISR, and most of the production in the U.S. in Texas and Wyoming will be. What Denison is doing differently is trying to apply the technology at depth. What they say is that if you have a sandstone-hosted deposit at depth, and you know enough about the stratigraphy of the deposit, and if the porosity of the sandstone is good enough, that you should be able to get the same results at depth that you do on surface. It makes sense to me, but I've never seen it done, so I'm a skeptic. What Denison has been able to do in a bench scale test is make it work. There's of course a difference between bench scale and commercial scale, but it's highly intriguing. If it works, Denison will have 2 mines to put in production using this technology, and probably more importantly, they'll be the world leader in employing this technology, the partner of choice in employing this technology around the world. Speculative, to be sure. I don't own Denison. I've been a skeptic about the technology, not because of any criticism of the technology, but rather because I don't know enough to evaluate it myself. That skepticism notwithstanding, it's intriguing.
Okay. I've heard you refer to it as a what was it, a strikeout or a long ball home run?
Exactly right.
Okay. Josh wants to know, he says, what are your thoughts and ranking for Faraday Copper, the Lundin's company?
Not ranked. I don't like the size of the deposit. I think it's too small. Maybe I'm wrong because the Lundins usually don't play around with small deposits. But I don't know enough to comment other than, it's extremely well backed by an extremely competent group of people.
Okay. Daniel wants to know Rick's rankings on Corix Copper.
Don't know enough about Corix to comment.
Okay. Daniel, we hit on Monera at the beginning of the show, so watch the replay for that one. Francisco wants to know, hey, Rick, do you have any thoughts on Cabral Gold? They're neighbors to gold mining and G mining in Brazil.
I don't own Cabral, and the exploration results that I've seen have been sporadic enough that I haven't chosen to follow it. Certainly, the neighborhood that they're in is a neighborhood I know well and have a high opinion of. But I do not own Cabral, and I could not, when I was attempting to tie their exploration results together, I couldn't make a deposit out of it.
Okay. All right. And Antia, I haven't heard of this. This is first. Hi, Stephen Rick. What are your thoughts on the resignation of the Newmont CFO? What are the real reasons behind this?
I do not like it when a CFO resigns 8 days before a reporting period. Uh, the truth will come out. I don't know. I mean, they gave guidance that suggested that their production was not going to meet expectations and that their all-in sustaining costs were going to be higher than they reported. And they gave that guidance, what, 8 or 10 days before the reporting period? That suggests some type of turmoil within Newmont. And I don't own a company like Newmont for that sort of turmoil. It is not a good sign when the CFO resigns immediately before the end of the reporting period.
Okay. All right. I'm gonna have to look into that and make a. This is my first of hearing it, so I'm glad you brought it up. Thank you. Hagen, got to meet Hagen out at the symposium. It was a pleasure meeting him. It's pretty cool when you see faces all the time in the chat, and then to actually be able to meet the person. It was pretty neat. So, real gentleman. I'm interested in Rick's current assessment of Alkane Resources and how that assessment changes post merger with Mandalay.
Uh, I follow both companies only in a cursory fashion. Mandalay has done a great job for 20 years taking small mines and making money with them. I don't like small mines. So, despite that success, I haven't followed them. And I wouldn't want to burden the questioner with my opinion on a company that I don't follow efficiently.
Okay. And Daniel wants to know any thoughts on Sitka.
Not worth publishing. That's another one that I have been unable to tie the exploration results together well enough to increase my interest in.
Okay. And another Daniel wants to know ranking for Hanan Metals and Azimuth Resources.
Azimuth is unranked now. Hannon, I have as a 6. I really like the geological concept behind Hannon. I really like the people. I really don't like the fact that they've been 4 years in pursuit of a drilling permit. It reminds me of starting a bank. It's an extremely frustrating position. So until they obtain that permit and they can begin to pursue their exploration thesis, I haven't, I have it as a 6. The concept is one of those where if it works, it's going to work in spades. It's going to really, really, really work. But they got to poke a hole in it.
Okay. And let's see, Michael. Michael, we hit Gladiator early, so watch the replay. Brendan wants to know, how does it happen that analysts get estimates way wrong, like Arizona Metal's recent resource of 10 million tons instead of 14 to 20 million expected?
Well, it really depends on what stage the deposit is at and who the analyst is. Early stage exploration analysis involves, by nature, a lot of arm waving. Sometimes it has to do with the analyst's incentive. If the analyst works for a brokerage firm that would like to be part of the next financing, he or she is under some pressure to generate a positive response so that they can be included in the underwriting syndicate and get a fee. So obviously, not all analysis is created equal. I personally prefer buy side analysis to sell side analysis. So, as an example, although they don't publish research, if I was to get research at our conference from, as an example, Dundee, but people who, rather than trying to talk you into spending your money, were preparing a report in anticipation of spending theirs. I would prefer that. That's one of the reasons why I'm so attracted to the prospect generator business model. The people that do the due diligence on prospect generators are companies that are proposing to spend millions of dollars on the prospect generators' deposits, the most honest of all analysis. I have occasionally been very accurate in early stage exploration forecasts, and I have on occasion been really tragically wrong. So I have some sympathy for the analyst in early stage projects. Later on, when I say later on, when deposits have become more mature and there's more data, what you want is an analyst who discloses his or her methodology, particularly the methodology around the least well documented parts of the deposit, the inferred. The measured and the indicated are often exactly what they suggest. But there's an awful lot of magic in inferred. And rather than dismiss the inferred, what you have to do is study the analyst's methodology and see if you agree with it.
Okay. Okay. I So basically, you're saying like a company like Maduro, it's tougher for Teo to convince BHP to come spend their money on there than it is to convince someone to buy their stock.
Listen, I mean, I've spent a lot of money on third party analysts looking at stuff on my behalf. And very often the consultants will try to figure out what I want to hear so that I'll hire him again.
Uh, okay.
If Rio is looking at something that Teo's doing, first of all, they don't send her a bill. They're not third-party consultants. They are looking at it from the point of view of spending $5 or $6 or $7 million. The most honest of all opinions. Uh, for years, these prospect generators have been coming to me and trying to get me excited about their projects. Trying to get me excited technically. And I would say to Teo, I don't care what I think about a project. I care what your customers say about the project. The fact that you have the BHPs of the world and the techs of the world and the Rios there means that Rick's opinion is less important.
Okay. Patrick is asking, he said, if you have any thoughts on the larger European oil companies like Equinor and Total.
Uh, Total, Total has benefited from, in effect, being a parastatal. Benefited from French foreign policy for a long time. That's starting to backfire as France's relationship with French West Africa has deteriorated. And the returns on capital employed and the investment decisions around Total have had as much to do with the aspirations of the French state as they have had to do with the shareholders. So I have not owned Total for a very long time, despite respecting them as explorationists. Equinor is a very different situation. I don't own Equinor, but the more I look, the better I like.
Okay. Josh wants to know, I didn't see this, but I guess Kenorland Minerals jumped 15% today in share price. Do you have any insight into that?
I didn't see it. It may be as a consequence of new exploration news in Quebec. For those listeners who don't know, Kenorland is a prospect generator that has generated at Frotté in Quebec what looks to me like an economic discovery, where they hold a 4% net smelter royalty. And there are two other projects, large scale projects, where they're getting some exploration joy. I didn't see today's news. I didn't see today's share price jump. I'm comfortable enough with my Kennerland position that I probably look at the share price, I don't know, once a week. I'm delighted. I guess it's up 15%. It isn't going to cause me to make a sell decision. It might be, frankly, they did an extremely good job at the conference. And it may be that buyers from the conference just used up all the stock for sale. I don't know how much volume was involved in the share price increase, whether it was news driven or whether it was simply a circumstance that conference related buyers drowned the sellers.
Okay. Brendan is asking about Robert Quartermain. He says Robert Quartermain could but will not build Dakota Mine. Who is the most likely to buy out Dakota, and do you think it'll happen this year?
Do I think it'll happen this year? No. Um, who buys it out will really depend on the answer to some unanswered questions. The most likely builder of the oxide deposit, Richmond Hill, would be Coeur, who operates the Wharf mine 2 miles away. My suspicion is that Richmond Hill, the oxide mineralization at Richmond Hill, is the proximal part of an upflow plume, an oxidized plume that is the Wharf deposit. I suspect that they are ultimately of the same genesis. Importantly, though, there's a couple of other play types, including the on echelon extension underground of the old Homestake lode, historically a 40 million ounce producer. There is also the chance that the state of South Dakota, who owns the original Homestake mine, will sell that to Quartermain. There is a lot of gold left underground at Homestake. Barrick walked on that deposit when gold was at about, I don't know, $280 an ounce. There is a chance that Bob, and I don't know that he's asking them, but knowing Bob as well as I do, I suspect he is, whether or not they would like to turn that hole into cash. And if he's able to do that, then the whole game changes. The whole game changes. All of a sudden, you're not talking about a 2.5 million ounce oxide reserve. You're talking about a footwall deposit, an on echelon deposit, an at depth extension, and the resuscitation of the Homestake lode. That would be a very different set of circumstances. For that reason, I don't think it's likely that it'll be sold this year because I think Bob sees an awful lot of exploration upside there. And he's pretty good at that kind of thing.
Okay. He wants to get the most bang for his buck, so he's going to wait a bit to entertain any sells. Okay, we got about 15 minutes left for everyone watching on other outlets, Twitter, YouTube, wherever you're watching. We're pulling the questions from the Rural Classroom Plus members. So follow the links down below to head over there or go to the ruralclassroom.com. David wants to know any update and comments on Next Gold and B2 Gold.
No comments on Next Gold. B2 really is a function of what happens in Nunavut, where they're building a large mine in very remote terrain. They are way behind schedule. They are way over budget. This is a good mine build team. I suspect, but do not know, that they will overcome the challenges. The question is how much damage will be done by the time that they overcome the challenges. The stock is statistically very cheap, generating a lot of cash, paying a decent dividend. But they need to get this mine built. And after they get it built, they need to shake it in. Remember, it is miles and miles and miles north of where Santa Claus is reputed to live. So your transportation season, ironically, is during the winter. You can't ship across Muskeg during the summer. It turns into gumbo. And you have 4.5 months to get all of your supplies in. So it's a very challenging operating environment, and you need to see that mine attain nameplate capacity before you get real excited about B2. Note that I own B2, however.
Okay. And David's also asking, we hit on EMX, David, a ranking on Maduro. What's your ranking on Teo's
I have
company?
Mondoro as a 4, which is fairly rare for me. This is a tiny, tiny, tiny market cap. The stock responded very well to the conference. And if the stock continues to respond, I'll probably have to lower the ranking because the ranking is all about the interplay between price and value. I'm delighted that there's a $16 million Canadian market cap company, at least pre-conference, that is cash flow positive, including all the G&A as a consequence of operator fees. These guys are making money without a mine, which says an awful lot about the industry's regard for the CEO and also about her frugality with the treasury.
Yep. Zahara wants to know if gold prices run up over the next few years, how do you think the major producers will deploy the loads of cash they will generate? That's a first world problem.
Oh, well, hopefully the decade 2000 to 2010 isn't prologue. In that decade, the gold price went up sevenfold, and the free cash flow per share of the Philadelphia Gold and Silver Index fell. It took real skill to see your free cash flow decline when the product selling price increased sevenfold. Right now, the industry is exhibiting very good financial discipline, both in terms of mergers and acquisition and also capital allocation to new builds. If the investment community's perception of the gold industry changes and the companies are asked to exhibit less conservatism and more growth, you may see this current virtuous financial performance change. It should be noted that virtually all of the managers who were in place during that disgraceful decade were allowed to pursue other employment opportunities. And the fact that that happened, I think, has probably chastened the generation of leaders who followed them. At least I hope so.
Okay. Let's see. David wants to know, Rick mentioned mega uranium recently. Can you give your latest thoughts and ranking?
I like Mega. Mega is sort of a hybrid, partially a holding company. It's a good way to buy next gen in drag, and an operating company. The guys are extremely skillful in the uranium business. They've been at it for almost 40 years. I've known them all their adult lives. It isn't a story that gains traction because it's a complex story. Holding companies, which is to say companies that are selling at a discount to the value of the sum of their parts, usually continue to sell at discounts because investors are nervous that they screw the portfolio up or they salary it away. In this particular case, I'm attracted to the portfolio. I'm a fairly large mega shareholder, and I have it as a 4.
Okay. Also wants to know about Latin Metals, another symposium company. What are your thoughts and ranking?
Prospect Generator, I have them as a 5. High quality people, well regarded by the industry, early stage, so don't own it if you're not willing to take some risk. I am. I like the prospect generation business. I like the fact that they've been operating in the South American Cordillera for 30 years. In other words, you have a team that is doing what they've enjoyed past successes at. But it's very much a process stock.
Okay, what's the main commodities they're after?
Copper and gold. You're looking for Andean porphyries.
Okay. Daniel wants to know your rankings on Kobo Resources and foreign mining.
I have no rankings on either. The Canadian dealer community is very attracted to foreign because of the discovery in northern Canada. I don't follow it.
Okay. Did Rick get a chance to review Surge battery metals?
Yeah, and I have not upgraded Surge battery metals. They probably are attractive relative to other lithium companies, but I'm really afraid of that commodity. You have a circumstance where in the exploration boom, we probably discovered 150 deposits worldwide, And the world wasn't short of lithium anyway. We were short of lithium refining capacity and processing capacity. Probably 5 or 6 of those 150 deposits make it. And that only occurs if direct lithium extraction doesn't work. If the industry figures out how to extract economically lithium from lithium-rich saltwater brines, then the lithium players become Exxon, Chevron, Berkshire Hathaway, Occidental Petroleum. So I'm staying out of the way in lithium. Lithium and lithium stocks have enjoyed a nice bounce in the last 2 weeks. They're doing it without me. I said publicly here in the Rural Classroom about a year ago that I expected that I would be in the lithium business in 26 or 27, that we haven't come to maximum hate yet. And when the circumstance sorts itself out, which is to say, when we find the 6 or 7 deposits that are going to get built, and those 6 or 7 survivors are selling at substantial discounts to net asset value, and the market is acting as though lithium is a 4-letter word. In other words, when there's hate as opposed to hope, I'll be there, but I'm not there yet.
Okay. All right. Hans has got the follow up to the SCP research. He says SCP research on Aya Gold. They have a price target of $20 Canadian per share, which is probably almost double where it is now. Maybe not quite that much. Is it similar to your model?
Their model is different than mine because they use a much more conservative discount rate. When SCP did the Aya research report, if my memory serves me well, they did a 5% discount rate, and then they applied a percentage of net asset value to that. I did my preliminary work on Aya with an 8% discount rate, and I did a different net present value calculation at 13%, which is their cost of debt capital. So using those parameters, by the way, they're stricter than parameters used by anybody else in the mining industry. I come with a lower number. Their model, their technical model, with regards to reserves, resources, measured, indicated, and inferred, is very, very good. The technical work that Brandon and the team did around the deposit, I think, is superb. And there's some confirmatory third-party technical research, which I think confirms that too.
Okay. If silver really breaks out, that company's going to kill it, right?
I think they're going to kill it anyway. They're really good operators. I mean, Benoit LaSalle is a force of nature. I watched him work 20 years to build Semifo before he sold it to Endeavour. They discovered and developed, if my memory serves me well, either 4 or 5 projects in West Africa. They're confining themselves now to the Atlas Metallogenic Belt in Morocco, but they're 2 for 2, taking over old silver districts, drilling them out, and putting them into production. Higher silver prices, rising tide floats all ships. But the truth is that these guys control a district that is a very, very, very important silver district. They were first movers. And in addition to being first movers, they've done everything right. They had 1 bad quarter, which the market punished them for, surrounded by good quarters in both directions. It's worthy to note, too, that last year, when the earthquake hit the high Atlas Mountains in Morocco, the mine was well enough built that it survived the earthquake well, although being underground during an earthquake must have been decidedly unpleasant. Benoit, I think, showed amazing foresight in shutting down the mine, which is expensive, and sending the workers home because the government of Morocco couldn't reach the high Atlas Mountains, the villages where these workers, lived. And he said, you guys have more important things to do right now than mine silver. Go back to the villages, look after your family. Remember that we have electricians here, we have plumbers here, we have heavy equipment here. We have everything that you need to help make your infrastructure livable. So if we can help your village, let us know. That probably cost we, the shareholders, $6 or $7 million, but I suspect it won us generational respect in the high Atlas.
Yeah, that's a good leader. Okay, got to start wrapping up here. Another silver question. Go gold. What are your rankings and thoughts on go gold?
I think we opened the interview with Go Gold, but that's okay. I think this is a district scale play. Maybe I'm confusing this with an interview I did earlier today.
Maybe we are. If we did, my bad.
It's
Sorry.
not impossible. Go Gold, it's importantly a silver question because depending on the gold price and the silver price, it's either gold dominant or silver dominant. I was a shareholder of their last deal, Gammon, which was for me a 15 bagger. So obviously I'm predisposed towards the management team. The exploration has become predictive there, which is always a good sign. It means that they understand the nature of the ore body. The challenge that you have there is really political risk. The president of Mexico has stated that she's anti-open pit mining, but will permit it in circumstances where the local community is in favor of it, which is her way of saying she wants her successor to get elected, and she understands that local politics are important. But the headline risk is always there. I think that the underground parts of that deposit will be permitted this year, but we need the open pit permits too. What the president of Mexico has said is that the mining industry has to get local support and local license to operate. In many parts of Mexico, not necessarily Oaxaca, where Go Gold is, but in many parts of Mexico, mobilizing local support means that you have to get the narcotraficantes on side because they are the manifestation of local support. The mining industry, or at least some of them, know how to do this, but it's not something that you talk about much in a press release. And these are hard negotiations. So it's going to be an interesting couple of years for the mining industry in Mexico.
Okay, you said underground and open pit. Are they kind of like bobbing and weaving with that and just saying maybe we're just going to go underground because of this whole open pit thing, or what do you see?
I think it really depends on the political winds. You get much quicker capital payback with the open pit.
Yeah.
And operating a plant with the ability to access feed from both underground and open pit maximizes your returns on both. So, they would very much, I think, like to do an integrated process, and I hope they're able to.
Okay. Okay. All right. We're tapping on the hour here. Do you have any closing thoughts, Rick?
I don't, except that particularly for those people who attended the conference, either live or live stream, thank you. Remember that the conference was meant to be used in conjunction with the lessons at the Rural Classroom. Those of you who didn't attend the conference can retroactively by buying the tapes, but I would urge all of you, whether you attended or not, to re-listen to the interviews that I did with the mining company CEOs in anticipation of the conference. Develop a shopping list around that, and then use the tools here at the Rural Classroom in the Introduction to Natural Resources to begin your securities analysis.
Awesome. Yeah, it was a lot of fun. I enjoyed the heck out of it. We even had a little student Rural Classroom student meetup for about 20 or 30 minutes. Callie and I were talking, and we'll organize that a little more next time, and maybe we can have a bigger class. But that was a lot of fun.
If Helen is on this call, but thank you, madam, for helping us with that. That was great.
It was awesome. Well, thank you very much, Rick. As far as upcoming events in the Rural Classroom Plus on July 23rd, Adrian Day is going to be putting on a class. And then a week from today, same bat time, same bat channel, July 24th, I'll be doing charts. So we'll pull up your guys' companies and look up any charts that you want to see. And then a week from then, July 31st, will be another Q&A with you, Rick, and Albert Liu. So thank you guys for being here. You have a wonderful rest of the day. Rick, always a pleasure.
Thank you, Steve. It's been a pleasure. Thanks for your help.
You're welcome. Have a good day, sir.